The forex market, the stock market, the indices market is fractal, meaning there are some reversal patterns that mostly occur in the market. That price have a particular pattern in which it always plays and react. So if you are able to identify these patterns, then making money in this market is inevitable. So in this video, I'm going to be sharing with you one of my best strategy in which I use in trading personally, in which I use in giving signals in my VIP group, and I'm going to give you that strategy for free. All right, it is a complete strategy. If you are looking for consistency in this market, or you are looking for a powerful strategy, then you have to watch this video till the end. I'll be bringing to you this analysis in volatility 75, and I'll be showing you some setup that I posted yesterday in the VIP group, and price has moved just exactly as I predicted. So you can see that was jump 75 and jump 50. So I'll be sharing with you examples, and you see price moving just as exactly as I predicted. I'm going to be bringing to you in a while why I mostly succeed predicting the market correctly. I'll make sure that you watch till the end, and you are not going to regret it. A pure price action concept will deal with demand and supply market structure. So from the VIP group, you can see this was yesterday. So this was a very big move that we caught. All right, this was for jump 75, and I predicted that price was going to move this way, and that's exactly what happened this morning. So we equally have jump 50. This was a trade that we predicted, and see price has moved just as exactly as we predicted. All right, so I'm going to be sharing with you this strategy. Now you can see this is the big move that we caught, guys. Okay, for jump 50, price was around here. All right, when I predicted it, I posted in the group that it was going to move like this. Now this is a particular concept that I'm about to share with you, and I will share with you using volatility 75 too. The same concept I've applied here, but let me start with jump so that I show you what just happened before I come back to the volatility 75. All right, now we will see that from here price was clearly in an uptrend. All right, so you see price form higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Right, when it moves, it comes back, it retraces, then it continues and break the previous high. I'm taking this scenario as an example. It moves, sometimes it retraces, it reaches the 50 level or the 61 Fibonacci levels, and then it shoots up and then breaks the previous high. Sometimes it retraces right back to the 100% level and then still continue its trend. All right, but in a situation where you see price retrace and then breaks the previous higher high, then you should start knowing in the back of your mind that there could be a possible change in structure. That's why you see that all of this situation, you see price move up, it comes back, it moves up, it comes, and then it doesn't break the previous low, and that's why you see price creating these highs. All right, that's why sometimes we use trend lines to connect. All right, so you see that, and then but there are situations where price could still come back and then break through, but when it reaches the 100 level, it still continue, and you see the trend moving. All right, like I said, until when the previous low has been broken or the previous higher low has been broken, where you can start thinking that there might be a possibility in the change of trend. Okay, but now in this situation here, you see that what happened here, when price from this high, it came back, it went and from this high, now it retraced back to this level, and then what happened, it finally came and broke through this previous higher low. This was the previous higher low here. So you can see that this was the previous higher low here that price broke through. All right, and when it came down, it broke through this previous higher low. What happened, it came down. Now when it came down, what I knew at the back of my mind that something is happening. All right, now you see that price now went up and then it retested the zone. Okay, came back now and then hit this trend line here, which was a stronger demand zone, and knowing very clearly that price have been reacting to this zone for a while, I knew that price from here now will likely retest to take a move down. That is why you see me, I marked out when you see the previous low, previous high being broken. All right, you now mark out the possible resistance zone in this situation that was in an uptrend. Sometimes it will move right up to this previous high here before moving back down. All right, now you see that I actually marked out this zone. I marked out this zone. So let me go to the H1 so that you can see clearly. Okay, you can see this is why I marked out this zone, because price got rejected here a couple of times. Now you can see, so when price broke through the previous low, I now marked this zone and I marked this zone. So I knew that when price will be coming back, there will possibly be a rejection in one of the zones. So I forecasted this zone to be the zone in which price was going to get rejected, and that's exactly what happened. And you see how price moved in our favor. Just imagine catching this move here. It's a very good rewarding trade with very high risk to reward ratio. You enter here, you place your stop loss just above, and you see it gives more than 1:5 risk to reward ratio. All right, now let's go to jump 50. Here we have the same scenario. You see price in an uptrend, price moving, forming higher highs, higher lows, higher highs, higher lows. All right, until when price came here, formed this higher high here. Let me zoom so that we can see clearer. Until when price came here, it formed this higher high. It came back now. It came and then moved and then broke the previous low. This was the previous higher low here. Right. So you see how price came here and it was a reaction until when it finally broke it. So when price react to this one, let me take us to the H4 time frame. All right. So this was the previous high now. When price came, it finally broke this previous higher low. All right, so I really had something at the back of my mind that price is going to break through and then get some rejection. So when it broke through now, I try now to identify the various demand zones down here. Price move according to a force. Either it should be a demand and a supply force that is pushing it, support, or a support and a resistance zone that is pushing it. So I knew that price was going to retrace in one of these zones to now go up and then pick its trend. All right, so I am considering this now to be a reversal. So I marked out this zone here. When I marked out this zone, price came now and there was a rejection, and I knew that price was going to retest up there. Like I said in the jump 75 example, that when you see a previous higher low being broken in situation of an uptrend like this, what you do is that you wait for price to retrace. When it retrace now, you mark the various supply zones or the demand zones up here. In one of those zones, price is going to retrace. When price retraces and reach there, it's going to get rejected and it's going to pick the move. Now you see that price came up just as I predicted. So you see that when price came up now, it got rejected here. And now there's a high possibility of price moving now following this trend. It's going to likely move and then break this lower low. This is a lower low now that price has created, because this previous higher low has been broken. So now it has created a new lower low. So it will likely now move from here. It will now move to break this lower low and create a new lower low, and that's how it's going to retrace, and you see how the pattern is going to continue. So this is how price always move in trending market. It creates a lower low, it goes back, it gets, all right, that's how it continue moving and moving. So that is the concept. You can see it's just as simple as that. So let's go to volatility 75. All right, for volatility 75, it's clear from here that price was equally in a downtrend. This is a downtrend. You see price here forming lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Let me mark it out so that you can see, guys. This is a very powerful strategy. If you don't understand very well, make sure you watch the video again so that you might understand very well. This could be a breakthrough strategy for someone if you understand the concept. All right, now this is what happened. So what happened here is that price now came back. All right, after forming this lower lows, lower highs, lower lows, it came now, and then what happened is that it broke through this lower high. uh, so it broke through the lower high. Now what happens is that we already know in the back of our mind that there's going to be a possible shift in trend. it could not be a total change in trend, all right, in this time frame being that is, it could be a possible shift in trend because price could move right up to this zone here, so it can start trending up to this zone, all right, before maybe in a D1 time frame you see something else, all right. But for the meantime, this could be real money to be made. Let me go to the H1 time frame. So I took a couple of trades here and I equally gave signals in the signal group. Another thing you have to take into consideration is that when price comes and then you see it break the previous lower low and then start reversing, you can be looking for sell setups, all right. But in a situation where price comes down, let me say like this, for instance, price comes and then fails to break the previous low. This was the previous low, lower low here, all right. You see price goes and then comes back and then fails to break this previous lower low, then you should know that there's another that's another sign to show you that in the shift of the trend. So you should not be looking for sell setups, because if it fails to break, some people might be marking this zone here as the resistance zone, waiting for price to come up here and then they sell. But you should only be looking for sell in this situation if this right leg here happen to break the previous low. When you break the previous low, you know that the trend is continuing, so you will not be marking what your supply zones, waiting for price to come there and then you take your sell order. But in this situation, you see that price came, it did not break, all right, it came here, it failed to even make it to the previous lower low, so looking for a sell here is a bad option, all right. What you should be looking for now is to wait for price to break through these zones, and then when it break through this zone, you now instead be waiting for it to retest the zone. Now this is what I'm talking about. This was in this situation, let's consider that price was still here, all right, price was still here, all right. Now this was the lowest zone here, which is the previous lower low that was created. So when price moved up, it came and then it consolidated, it moved down, it came, now it broke this previous low here, all right. When it broke this previous low here, it started retracing back. Now I knew that I could take a sell setup because the previous low have been broken. This is a trade that I took. I even gave the signal in the trading group, in my VIP group. So you see that it went up now, and when it came, it got rejected around this here, which was the previous high of the moment. This was the previous high of the moment, so I took my sell order here because price broke the previous lower low and it was retracing. Now I took my order here, so I took the order here, and that's how price moved right down to this minor support around here. Okay, so what happened is that we saw a rejection candle. I went out, a rejection candle now showing that price has been unable to make it even to this previous low. And what happened is that now I was no longer looking for sell set up here, because I know that from here price is going to likely break, since it has failed to break the previous low. So that's exactly what happened, and now price has broken through. You see how it moves powerfully up. So now we'll likely be looking for buy setups. But from here now, price will likely be reversing back to to one of the zones. When it reversed one of the zones, we are now going to be going long, because there's a possible shift in trend, and that's how price will now start consolidating and then creating new higher lows and then higher highs. So that is it. Let's take a recap. A recap is that we are following, or we are moving just with the trend until when, if it is in a situation of a downtrend, we are looking for sell setups until when the previous higher high have been broken. From there, we'll consider that there will be a possible shift in trend. While for an uptrend, we'll only be looking for buy setups in a situation of an uptrend where price is creating higher highs and higher lows, until when price finally break through the previous higher low to the downside. When it breaks through the previous higher low to the downside, we are not just going to sell immediately. We are going to wait for price to move down and then reverse in one of a supply zones that we are going to mark, and then we now wait for price to come up now and retest the zone in which it got broken, and from there we'll be selling. So that is the simple concept. And if you see that price fails to break a previous high, or if it fails to make it to the previous higher high in this situation, you know that is a possible shift in trend. So we'll now be waiting for price in this situation. Now we'll wait for price to break through, then comes back and retest one of these zones, and then we'll be selling, because it has failed to break the previous higher high, and then in another instance it broke through the previous higher low. So that is the concept, guys. It's just as simple as that. If you have any questions, if you have any doubts, if you have not understood very well, you can feel free to comment on this section, on this comment section below. This is a very powerful strategy, guys. And like I said, the market is fractals. These are reversal patterns that will mostly happen. That means it's more than 60% of the time it will mostly happen, but it will not always happen, guy. As a trader, you have to put this in the back of your mind that in some situation it will not always happen. Sometimes you do your prediction, it will not move that way. But what will make you a winning trader is that you use at least 1:2 risk to reward ratio, or you, in situations like this, you make sure that you make your winners to be more than your losing trades, so that at the end you will be profitable. So that is it. I'm going to make a video in which I will talk extensively on risk to reward ratio, which is very important, and I'll post it in this channel. So that is the concept, guys. Thank you for watching. Please, if you are new to this channel, subscribe, click on the like button, click on the notification bell so that you don't miss out in any of our videos that we post. Thank you. See you in the next video.